Thanks.
All right, all right.
Yeah, thank you. Good morning, all. I think, sorry, there was about 10-15 minutes delay. Uh, Thank you for, I think a lot of people have joined. Yeah, I think, let me try to do some justice to all of you. Uh, Initially, what was expected was just like, ask anything kind of a stuff. And then there were some questions posted because I started sharing an Excel sheet. And then I thought, I would take through what I normally do. See, I am a long only investor. I normally don't trade on futures. So that's something which I've never understood. I have dabbled in it. I have lost money in futures rather than making money. But my cash always I have made money. So I have decided I won't do on futures and I only concentrate on cash. So since it's a cash, it's only always a long only philosophy for me. Uh, just give me 1 minute. Okay. So what I would do is I normally use two softwares. Pretty much my trading pattern is on point and figure. So that's my bread, butter, jam, and everything for me to trade on. And what I do is I use my trade point software to screen for stocks. And so you'll have an excuse for some time because I'm trying first time to do all this stuff. Uh, Share screen. Okay. All right. So is my screen visible? Yeah, I guess so.
Yeah, it's visible.
Yeah, I guess so. All right. So the way I do go about is to set up my screeners, right? So the first question is I will just take you through what I do for my Excel, and then I can probably try to explain what I do. Because I am being long only, I want to ensure that my systems are all bullish signals for me. And for me, I start with all the time frames. So this, for people who are not familiar with the trade point, maybe I can try to give you a couple of brief on this. So this software is available on various versions. What I have is an EOD version only because I don't trade on futures. I don't need live star charts. So I have picked an EOD version. And then every evening it kind of updates on the prices. And this one software allows you access on various technicals, which is on OHLC, which is also on point and figures and Renko. I don't use Renko at all. So what I do is when I start after it updates, so these are the various features that are available, and I go for directly into the OHLC system matrix because everything is price, right? So and I want to check on price, and so the key is you have to develop systems which we will probably touch base once I explain what I'm trying to do here. The system is a very simple system. So I choose my universe, which is generally on Nifty 500. Uh, and then I have established some systems, right? So if you see here, this is a system which I have created. And if I scroll down, you will see a number of systems which I have created on my own. This is essentially you just write down your parameters and then you can go and define it in the system builder. For example, for somebody, people might say, I will only trade stocks where the RSI is above 50. Or I might look only when I enter when MACD is like this, or when ADX is about 25. People will have different styles of approach. So you decide on what is your style. Once you set your parameters, then you can do a system builder. So here, the system I like is on EMA. Right? So essentially, it's a very, very simple system. I want stocks which are trading above 50 EMA, 100 EMA, and 200 EMA. Right? So it's on the exponential, not on the simple one. So it's a very simple system, and I want the same system. See, the only big advantage is at a time I can screen on all the time frames here. So that's the advantage of this matrix for me. So I choose all the three systems, all the three time frames on the same system. So I'm looking for stocks which are above 50, 100, 200 in daily, weekly, monthly. And once I choose the group, you just hit scan. So it takes a couple of minutes to run. The advantage here is that you can change the scanner type. So it gives you, it's now a plug and play for you. So you can say, I want above these EMAs on daily, and now you have, the list is available. So what it means is that it's a binary coding. If it satisfies, it gives you 1. If it doesn't satisfy, it gives you 0, right? So for example, if you take a look at 3M India, unfortunately, I may not have the 3 EMAs marked. So what I will do is I will remove this for the time being and add a So if you see, then we can figure out where they are, stocks are figuring out, and then you can change it from weekly to monthly. And then it will tell you whether it satisfies. 3M did not satisfy in the daily candle because price was below one of the EMAs. Even if it is below one of the EMA, it will give you a 0. All right. So only in weekly it satisfies, and monthly also it does not satisfy. So once you have done this work, then we can export this output. So now I don't have a whole 500 stocks to worry about. I have only a bunch. So that is what I go. You can go here. Unfortunately, when you say 3, it takes 3 and above. So it's an advantage, disadvantage kind of a system there. So you save that and you give a group name. In this case, I've already done that, so that I can still go ahead and give one more name for it. So I have saved it now. So what I have done is I have reduced my universe. But if you want, we can change and play around here. See, I have also set up another system, which is, I'm basically an Ichimoku guy, right? Because the chart is an absolute beauty, because one look at it, it kind of tells you what's happening on the stock. For example, so this is Tata Motors, right? Now on monthly, this chart is bearish for me, because the way you read this is very simple. Anything above the cloud is bullish, anything below the cloud is bearish. So on monthly, this is a bearish chart.
I can't, sorry, Madhav, I can't see the chart.
Oh, sorry, I have to share this also. All right. So,
Yeah, can see.
correct. So now when you see the Tata Motors, this chart is the cloud is a simple entity here. So anything below the cloud is bearish for me, and anything above the cloud is bullish for me. So one look at it, it kind of tells you this is going down, price is going down, and you just look at uh, the direction, the momentum of these, the slope of these lines. It clearly shows you on monthly it is going down. Then you look at weekly. Weekly also it's still going. You know, one look at it. Nobody needs to tell anything about the stock. What is the stock doing? Is going down. All right. So in a sense, I like Ichimoku ever since I heard about it. So for me, it's all on Ichimoku. So in my PNF also, I have created a system for Ichimoku. Right. So what I have done here is we are back onto the trade point. So you have used the first screener where you have filtered the stocks on strength. And then now, if I want, I can add another simple 10 can here. And then I will say all this also has to happen on the daily time frame, and let the stock be above all this only on monthly time frame. So you can play whatever is your duration and time you're looking at, and then screen it again. So then it will tell you whether there are stocks which meets your criteria or not. Normally, I don't do this because once you have filtered because you have combined two different entities here, right? On a daily time frame, you're asking two questions, which means you have increased your filtering ability. So the output may change and you may miss something else because on weekly, this stock may be doing something else. You don't know how is the stock on the weekly. So just let's wait until this is done. Because why I don't want to do that is because I can go back to the scanner now. And if you remember, we have saved it, right? So we have used this as the set. Now you know this is a particular set of stocks where it is trading above on daily, weekly, and on monthly about those three EMAs. Right? So you know about the stocks, the behavior of the stocks. And there are certain predefined patterns, right? Whoever is familiar with all these may be able to figure out, three bells, white crows, and all that stuff. But I don't follow them. So I have also created my own styles, So I will look for the simple 10 can. I will explain what is 10 can, by the way, right? So when I do that, because here again, I have the flexibility to check. So now this is Reliance. We know that Reliance price is trading above its 50-day moving average, its 100-day moving average, and its 200-day moving average in daily, in weekly, in monthly. And now we have a bullish 10 can crossover on daily, right? But if I want within this setup, if I want weekly, then I use the same and then run for weekly, right? So there are more stocks. So depending on what time frame you're looking for, we can screen it. So that's why I normally don't tend to do this. So if you want to look at Reliance stock, you can have a look at the Reliance stock. Right. So if you see here, this is the crossover we are talking about. Right. So the red line, if you see here, when I place the cursor and the numbers on the right hand side, right? TL was lesser than KL on the last but one candle, and in this candle they swapped. So that's a 10 can crossover. Why is it important, right? See, in Ichimoku, we don't use EMAs. These lines are not EMAs. So those who are familiar with Ichimoku, excuse me, and for those who are not, This is nothing but an average on the high and the lows, right? So the 10 can, which is the red color line, is the highest high and the lowest low of 9 days. Right? And the KL, which is the Kijun, right, is the highest high and the lowest low of 26 days. So this will change, right? These numbers will, this KL will change only when the 26-day high and low will change, right? I'm going to swap my charts to trading view because I can explain that a little better there. Right, so we want Reliance. So Reliance on daily. So it's the same crossover with the next 26 days, right? So in trading view, I have a tool which allows me to pick for date range. So this is the starting candle. So 1, 2, 3, 4. So the next 26 candles, right? So we have to look at the highs and the lows. So this is the highest high and this is the lowest low. So as long as, so we have to for sure know that if this high is taken out, then this number is going to keep moving up. And I always look for the slope, right? So it kind of gives you the momentum and the direction. It is a trending stock on the up. So that's how it helps you to understand what is going to happen to the stock. And in this case, we know that the prices both for Tenkan and Kijun is going to move up because the 26-day and the 9-day averages, high and the low, is going to change continuously. Yeah, sorry. Right. So that's how I can screen for my stock from this. All right, so now let me close this window. So if you remember, we started one more screener where we are looking for a 10 can. I think somebody's guess should be Reliance should come up here, right? Because we saw that Reliance did give a bullish 10 can on a daily time frame with these conditions. And you will find that's the only stock, all right? So Reliance is the only stock which satisfied these three conditions for you, which means that the stock is trading above its 50, 100, and 200-day moving averages on daily and on monthly time frame, and simultaneously gave you a simple 10 can crossover on daily. But this, we will not know what happened. Let's assume that there was another stock here. Then you don't know whether that stock on the weekly time frame also is trending up. But the reason is I want to avoid VIPs as much as possible. Right? If there is a chance, we can avoid it. So that's why I don't do that. So my step one is to screen on OHLC using a defined setup across 3 time frames. And once that is done, then this system allows me to go back to point and figures. Why I like point and figures is that it gives me a more objective assessment for targets, right? So before we check that, let us just look at Reliance chart on point and figures. point and figures removes the spikes, right? If you on a daily and weekly, you will have some spikes. There may be just a single print or a couple of prints on some numbers, and it looks like an ugly tail. And we don't know whether we'll use them, we will avoid them. Different people have different opinions on it. But here we won't have any of those because it just goes by the closing prices. And let me remove all the stuff that's already there. Right? So this is what it looks like on a daily. Right? So it just means that any pullback here is a buy for me on a point and figures because it's already on a buy signal here. And if I have to look for likely targets, right? So we'll have to look for active columns on which the targets are still alive. The way the targets are plotted in PNF is you look for a cell. This is a cell, right? And then this column as an immediate buy. So this is an active column where I can plot targets. So this is a tool which allows me to plot the targets. So that's what Reliance is indicating at. So we are looking at a minimum of 1854 as long as this column is not violated, right? And then this is our next target. So there is, if you look at here, this is also another column which is a valid column, right? The only problem is the targets are already met. So ideally what we should have done, so this was on 21st of May. And then subsequently we had this pullback column on the 26th of May. So post 26th of May, if somebody had tracked Reliance, you would have bought at right. So this, if you see the commentary column here, so it just tells you that the double top buy was at 1441 with a stop loss at 1405. So if somebody had tracked Reliance, and we know Reliance was about, so in my screener, Reliance would have come on every day because it was always about 20, 50, and 50, 100, and 200. So if you had looked only for buy signals there, and if you had picked it, so you're looking at about roughly about 40 rupees stop loss, and then you would have been riding this column here, right? So I've just gone all over, I believe, but then we'll come back and I'll try to structure this. So we have done a screener on OHLC to get very strong stocks, right? That's a belief that if a price is trading about 50, 100, and 200, it's a strong stock. And considering that we have fallen down from 12,400 all the way to 9,700, even below, if we still have stocks trading above that, then there is a lot of strength in those stocks and we look for those stocks. So then what I like to do essentially is go back to that particular stock selection, and then you see there is a simple sit screener which is just a double top buy signal, right? Okay, so a double top buy means it's already in the double top, so it's not a double top buy. So from that list of very strong stocks, it kind of tells you what are you looking at. Now, if you look at Divi's Lab is about 1% away from a buy trigger with a 3% stop loss. So net, you're looking at about 4%. If that is something which is digestible for people, then you can look at it, right? So this is what Divi's chart looks like. So this is a target column which is active because there is a sell. These targets are active but not alive because we don't have a buy yet, right? So the buy triggers when we have price closing about 24.85 on a closing basis. So let's open on Monday, the price trades above that 24.85. It's your choice. You can wait till the day's close, then the stock may gain strength and go on. Or you buy that because you know what's your stop loss. If you had bought it here, luckily we are still in this column of green column, right? So you're still okay because the stock has to reverse and then fall. So if you, on Monday, you may wait for the trigger, you may buy without the trigger coming, it's individual's choice. But whatever you do, you have to remember that this is invalid if the price falls below 2380, 81, right? So if you buy on Monday at whatever price you want to buy, not waiting for the, buy signal to happen, then you exit if the price on Monday closes below 2381, because it would have triggered a sell. And then you wait for a fresh buy. So that's the only point why we wait for fresh buy, is not to lock the capital. Because there, if you see there, Divi's was not the only stock. There are about 5 stocks here. So you wait for the stock which gives you the buy and then use the capital, because for all you know, Divi may not give you a buy on Monday and may give you on Wednesday. So it's all patience if you want to wait for it. But what I normally do is I don't use these predefined setups. I have created my own setup again. So what I like to do is this is follow through. I'll tell you what is this follow through bullish, right? Luckily for us, TV lab is still there, right? So Monday I will watch for this, and any of these which comes up, you look to buy. And because most of them are around the same 4%, this is 4.2%, this is also 4%. Escorts is about 1%. You have to add both of them for your stop loss, and because you will buy after this is triggered. I would avoid Britannia, because Britannia, the stop loss is pretty huge for me, unless you manipulate it internally yourself, right? The stop loss is used because we have a column here. But you can, the difference between this and Divi's, right? Divi's was a green column here. So we know that the stock has to reverse if it has to correct. So you had a buffer zone there. In Britannia, we are on red column here. Monday, we don't know what is going to happen. See, Monday, if let's open, it opens above 3470, 3480, or even 3500, which will be here. But we don't know how the stock is going to behave till 350. If the stock reverses into this direction, then if you had bought, my advice would be we exit it, because you're taking a big risk, because this can go down. And when it keeps going down, we don't know where it will stop. And so it's a prayer syndrome now, which is not the case with Divi. So let me just plot both the graphs side by side. So this is Divi's, and let's plot Britannia. All right, see, in Divi's, we are in the column of green here. So wherever it opens, if it's going to move to the other column, right, which means the price has to move. And to a great extent, it tells you when this price will move into the other column. For example, if you see here, there is on the right-hand side, there is a text called CR value, which is nothing but the column reversal value. So if the price for Divi's closes below 2441 on Monday, then we will have a column of red. Right? So it gives you an indication. So even if you had bought it on any price on Monday, if it's on the column of red, it's prudent to exit, because you don't know what can happen. Right? Now, if you go back to Britannia, unfortunately, Britannia is already in a column of red. Even if it opens in the green, unless it closes above 3480, we don't know whether this column is going to continue or is it going to reverse. So that's the call one has to take if you're going to buy without the buy triggers happening. So it's a personal choice. You know, some people would like to cross before a moving train. I would rather like to wait and see whether it happens or not happen, because every time we may not be lucky. And you would have seen some scripts, they open strong, but then they drift. So it's a clear indication that there are sellers still active. And you wait until they exhaust before you want to buy. So that's how I try to pick my stocks. So meanwhile, the Excel file that I float is for the comprehensive, because there I am not screened anything, right? So there is an option which is called a fusion matrix here, point and figure fusion matrix. And so there I choose my scripts, and then you choose your index you want. So this is essentially, the point and figure has two aspects. One is on the stock itself, which is all the first 8 columns. And then the next 8 columns is the strength of the stock against something. That something is your choice. So since we screened Nifty 500, and all these are a constituent of Nifty 500, I would like to see Nifty 500. But you can screen against Nifty 50 as well. It depends on what is our taste preferences. So I'm screening them on Nifty 500. And then you can export this, because you want to play with this chart now, right? The data. So you export this and then save it. I guess you guys are with me until this, right?
Yeah, yes, sir.
Yeah, all right. So before we go to the Excel sheet, let me try to tell you what is this screener that I have built. So to build any screener, System Builder is the tool for you. If you have this software, so you go to System Builder and you can create the tools. And since it's got a number of options, you can build tools on simple candles, point and figures, line, Renko, Heikinashi, or whatever. So I would like to build it on point and figures. And there are a lot of stuffs already which I have built. So this is, what am I looking for? See, we are already screened on strength, and I would like to screen it even further on that. I would like to screen it on the strongest of that stronger stocks, right? So that's what this is, follow through bullish means. So if you put the edit button, this is exactly what I am looking for, right? So let's put release chart here. And I will have this set up here, right? So what am I exactly telling the system is that, look for stocks. This is point and figures average, right? So anything that we do on point and figures is for point and figures, like candles. So this line which is here, this is the moving average. That's a 10 column moving average. Point and figure does not talk about this, right? For example, this particular column here is running for 2 days. So since we don't talk about days here, this is on column. So this line is an average of 10 columns. And that's how that's plotted. So we have to be very careful when we talk about a 10-day moving average in a point and figure chart and a 10-day moving average on a candlestick chart. So my first condition is I want that stock price to be trading above the 10-day moving average in point and figures. I haven't tweaked anything I normally don't tweak on any parameters which are default. So for example, if I go to Ichimoku, the default is 926 and 52. So I don't tweak them. MACD, RSI, I don't tweak them, because a lot of people have done a lot of research on that and they've left that as the best probable conditions for it. So why waste my time on trying to figure out which is the best time? Prashant, who has designed and developed this software, has spent years on this, and he believes a 10-column moving average is the best. And so be it for me. And then I have mixed and matched, right? But please understand here, whenever we talk on point and figures, it's all on columns. So now I want the box, the 26th box, right? In the Ichimoku, there is one particular line which is called the Chekhov span. And I have a great respect for that line because that is nothing today's price, which is plotted 26 days behind. Right? Ichimoku is a Japanese technical analysis creation, and I haven't understood yet, or I haven't read yet why somebody has done this. But for somebody to plot a current price all the way up to 26 days behind without tweaking anything, obviously has to have some purpose, and that guy has probably understood why. And I haven't obtained the original Japanese version, and what we are all reading is the translated version. And any translated version, we may not never know what the inventor or the original guy who wrote it thought about, right? So I still like that. So I did the same here. So I wanted my Chico span to be above the 26th column here. But please note the 26th column here may not be corresponding to the 26th day of our normal candlesticks. And then I wanted a pattern at a double pattern, which is a double top buy at 2. So if you see, this is 0, this is 1, this is 2. So you have a double top buy at 2, which is a normal bullish signal. I am not happy with that. I want a subsequent bullish signal to appear, which is what I'm waiting for in BBs. So I have a bullish signal, which to some extent you can think of as a breakout, a retracement, and now a subsequent breakout. So I just want to ensure that there is no false breakout happening here. But in true sense, this may not be a right representation for it, but a kind of made up syndrome for me. So I ensure that there is a breakout, and then there was a retracement, and now I'm patiently waiting. Am I going to get a breakout, or is it going to get into a constriction, and then I don't know what will happen? So that's where it's sometimes better to wait for the signal, because the price may oscillate here for some time, and then it may either break out or break down. So in that case, we may come back and say, oh, Divi's had a false breakout. It will be in hindsight trade at the later stage. So that's where I always recommend you please wait for the signal to come out and then take your trade. You might have run up, the price might just continue going. In that case, that's the risk you run, which is better than getting stuck with this. See, emotionally, once you enter, we always wait for the buy signal. And we ignore the sell signal and saying, look, it's a strong stock. It's above 50, 100, and 200-day moving average. Okay, there was a sell. It will come back and give me a buy. It becomes a headache. So after the double top buy, my next condition is I don't want a double top buy at 0. So you wait for that signal. And in between what has happened, right? So in this case, there should not be a sell signal, or there should not be a buy signal, right? So that's the condition that I have drafted there. Because if you look at where is our list? Let me just look at let me close this. Let me see that list of hours. See, and here also you can change your box size. Kind of 0.25 is for daily, 1 is for weekly, and 3 is for monthly. The only difference you'll have to remember is the stop loss keeps increasing as you go. So I stick to 0.25, which is the kind of a daily time frame. Britannia and Divi's both came up, right? Britannia came up. Why? Because if you remember our condition, we needed a follow-through buy. We have a buy. We have a retracement, and if it closes above 3515, we are going to get a buy, which satisfies our condition of a follow-through buy. So there was a buy, a pullback, and a buy. So that's why Britannia also came up just as much as SRF or DVs, all of them would satisfy. If you see here, in this case also, right? So DVs is SRF is like an example for Britannia because there was a buy, then there was a correction, and now we'll have to wait and see what happens. If you get another buy here, then it satisfies the signal. So I look for this particular follow through buy and from that list. So in that way, if you look at it from a 500 stocks universe, we broadly have about 5 or 6 stocks to play with, depending on this. So on a daily basis, it's hardly about 10 minutes work for me. So you come home, update this, run your 2 screeners. So you first run your this screener, system screener, get the pool of stocks, and then go back and screen here. You can screen for whatever systems you have built here, whichever you are comfortable, whichever you think is your lucky charm and gives you a best hit rate and all that. See, you can always do all back testings, right? So why do I like follow through, right? The only problem, it takes a little time when we do back testing. Let's try. So you choose a group, let's say FNO stocks, or let's put Nifty 500. Right. So if you remember, we had chosen FT bullish, right? Full follow through bullish as my selection criteria for buy, and my exit is always on a sell, right? And if you see what is this sell, the sell will be a very simple. It's just a double bottom sell, period. You exit it if I find a sell there, right? So I'm just going to ask, right? So whenever I like to do this even before I enter into the trades. So I believe this is a good system. So you go back to your universe and then you say, okay, let me do a back testing. And this back testing is going to be done from a period of 1990 to about 2020. On the time frame you're doing your trades. So I am looking for trades on 0.25. So you scan it. So let it do the scan. Meanwhile, I will take you through to that Excel sheets. Right. So the Excel sheet is visible, I guess, now. All right. So this is the output which has come out. And what I like to do on this is to sort, right? So there are a number of columns. So the first 2 is self-explanatory. These 4 columns tells you only about the price of the stock, the behavior of the stock, right? So if it is true, which means it's a buy signal there. And if it's a -2, it's a sell signal there. And these are the box sizes. So for example, if you go to Torrent Pharma, right, we have a sell signal in in a 1 box frame, and whereas it's in different style in the different forms. If you look at JB Chem Farm, it's a buy signal in all time frames that you're looking at in point and figures. So that's what it tells. If it's 1, which means there was a buy or a sell signal and something else is happening on the last column, right? And whenever there is a red column, you just add -1 to it. So in fact, just from this column, you can predict what's the PNF structure for that. As practice goes by, you will become like that. For example, let me take a Torrent Pharma. Torrent Pharma says it's -1, which means in the box size of 0.25, the last column is an X column, and the preceding column is a sell column, right? So I will explain that when we go to the charts, right? So just remember that. And in the one box, Torrent Pharma has a sell signal. And in the box 2 and box 3, Torrent Pharma has a buy. And in the last column, we have a column of X. That's what it means, right? So let's have a look at Torrent Pharma. Meanwhile, our backtest result has come. So we will, since we were in Torrent Pharma, let's close Torrent Pharma and then have a look at the backtest result. All right. So this is a sell signal. If you remember, in 0.25, it had a value of -1. So which means there is a sell signal. This is a sell signal, right? Because this closed below this. So it's a sell signal, and then it's reversing. Now, if we get a buy, this could be a false breakdown, all right? In all likelihood, this stock is very strong for me. And the only problem right now is it's trading below its 10-column moving average. So we will still wait for strength in this stock, but this could be we may be in a whip zone as well. And remember, in 3 column, it was 1, 3% it was 1, which means there was a column of buy, and now we are in a column of red. So which means that the price has moved up and it's correcting now. Whether this correction is going to stop and strength will come back, we have to wait and see. So that's the understanding from that Excel sheet. It's okay. We want to go to the Excel sheet, or we will finish this back test and come here. What do you want to do?
Yeah,
Excel sheet.
All right. So if you remember, we wanted to do the back test, right? So you forget the rest of the columns on the right because we didn't do any short entry signals here. So it has screened for all the stocks. And if you look at the average, right? So you can look at individual stocks also. But on an average, what it says is that the success ratio is about 42% for this, with a risk reward of about 10 and an expectancy of 3.65. So it's a positive expectancy and it's about 42% success rate. So it's a fairly decent one, which I would like to utilize. So we can screen for anything that we would like to do, right? For all of them, like there is a simple double top buy as well. Let me just confirm if this is a simple double top buy. So it's a simple double top buy. Let me open it. Let's run to 50 with 5500. So I'm just scanning for a simple double top buy. Remember, that's the basic signal for somebody to buy something. And let's see what's the difference between both of them. So this is the follow through one, which is essentially the second buy signal which I would like. And if you see this, right, the number of trades are far higher now, right? And the success ratio is 54 to 42, and the risk reward is 5 to 10. So it's a gamble now. What do you want, right? You want more trades with a fractionally higher success rate. So 42 to 52, it's all perception based, right? So whether you would like that combination with a risk reward of 5, Or are you happy with a 42% success ratio, but with a risk reward of 10 and a higher expectancy ratio? So this is something you play around and comfort yourself. What I would like to have lesser number of trades. I don't know. See, this has given you about 142. This is 76. So it's about half. I would rather play with lesser trades than kind of, because you have to understand, backtest means you took all the trades. So there is no sub-selection criteria. Okay. See, in the screener we did right now, we got 7 or 8 scripts. The deal is, if all of them turn buy on Monday, you buy all of them. And let's assume you're going to buy for, say, 10,000 rupees. You need 80,000 rupees on Monday to buy. You can't say, okay, I will not buy that stock, or I will not buy this stock. And this stock is not based on, if MRF comes up, it's a pretty goner. That one single stock is 70,000 bucks. And we can't buy fraction shares. So if you omit MRF, then we can't come back and say how good or bad the systems would be. So I pick up every single stock that comes, whether it's MRF or whether it is idea. I still pick it up because then you have to obey your system. So the idea is, when you create a system on your system screener, please go back and do back testing and feel comfortable with that. And you can play around with various systems and comfortable. And then you choose whether you want a higher risk ratio and you are sacrificing on expectancy and success. What is that your profile looks like? Right. So yeah.
Madhavan sir, so one question is the presentation was kind of interesting, and it explained a lot of things. But how to reach that point, right? So kind of you are explaining from the point of complete understanding for a beginner. Kind of how can one go there, sir?
See, one is you fix your what is your first is you have to believe on technical, right? So I believe, since all of us are sitting here, we believe in the technical of the charts, right? So charts, I personally feel and believe charts talks to you, right? So I believe on that. And when it comes into technicals for a starter, you figure out stick to price. Price is everything. Price dictates terms. So once you have a price, and everything is a derivative of the price, whether it's PNF, whether it is candles or whatever, they're all derivatives of price, right? So, and once you have picked those two terms, then there are a number of technical indicators, starting from ADX to RSI to MACD to many. One has to figure out what, and I believe there is a vibe, right? I was thinking, how is that possible, right? See, if you look, there are about 50 of us sitting here, and if you just go back till our 9th standard, all of us read the same subjects: English, language, maths, science, history, geography, right? We were all given the same, but over time, somebody liked something in those, and then we all kind of branched out. And then when you look at chemistry per se, right? I stick to chemistry because I'm a chemistry guy and I can relate it. And similarly, a software guy can relate to software. When you go there, you are again exposed to multiple fields inside it, and something clicked for you and you stuck to that. So similarly, when the various technical indicators, I have listened to a lot of them. And ever since I listened to Ichimoku, I don't look at anything else. I don't look at RSI. I don't look at MACD. I don't look at any of them for me. It's only Ichimoku for me. But for somebody, I know a few people who will swear by RSI. They will take their trades only on RSI. Some people may trade only on ADX. So for a beginner, you have to figure out which is that which tallies with your profile. Everybody's profile will be different, and something will tally with your profile. So you learn about that. If it is RSI, spend some time trying to learn about it. How to set up systems from RSI, how to set up systems on MACD. And then you can figure out, once you have figured that out, right? So for example, if RSI is yours, then there are some rules, and I think it says RSI 50, RSI 70, RSI 20, 60. And then you pick up trades from there. So you will say when price is like this and RSI is like that, I will not pick up, or when you define your entry and exit criteria. And once you have established that, you can create your trading systems. And before you create, once you create your trading systems, do back test. See what back test does is it kind of gives you a confidence how these guys behaved over a period of time. And it's an historical data. So you know whether the system is good or bad or ugly. And then decide how do you want to trade. Just as much as I did trades here, right? So I can do back testing on OHLC also, right? So if you remember, I had a screener called the simple 10 cam crossover, right? So you can screen here again, and then the exit has to be for bearish. So here you can screen for whether you want it daily, whether you want it weekly, whether you want it monthly. And since I don't have real time, I can't screen for any of these. But you can screen for 120 minutes. If you have a real time feeder, you can back test for 120 minutes. Then it gives you a confidence once you see the numbers, right? For example, let me put weekly here. And then once you screen that, you will again get some numbers. And go back and compare what, it's always the trade-off is between the number of trades, success ratio, expectancy, and risk reward. What is your best bet? Which are you willing to compromise for what? So that's the basic. So for a starter, find out what is that which impresses you, right? Once you have understood that technical indicator is what suits your profile of trading, develop a system for it, trading system for it. And then once you have developed the trading system, please run a back test. Without running a back test, don't indulge into trades. If you indulge into trades, buy some very small quantity where you don't, maybe buy it for $500 because it's the cost of a pizza. So you can at least enjoy that, okay, I bought a pizza and I wasted that. And, or you do paper trades. So today we saw the set of screener which came up, and then it said Divi's Lab. So if Divi's closed Monday on above the buy price, you open a piece of ledger and say, okay, I bought Divi's on this day. Track it. And if you're feeling comfortable on this paper method, then jump and get wet with real trades. There are different styles available. I personally feel that is the best way to do is to put your money in. If it's a paper trade, you may disobey your own system because there is no hard money involved. So when I started some of these system-based trades, I started with 5,000 rupees, right? So when it comes up, you buy it for 5,000. And because you have to exit it whenever it comes. So in that way, you have a real trade which keeps going on. And then let's have the system, right? So this is because your expectancy is positive and your risk reward is fairly acceptable. You have a decent system to play with, right? And actually, I did being a science guy, we like to do research. So there were every Saturdays is my fun time with all these tools. So many things are available. So I can continue to play. And let me just take you through a couple of slides when I did this research. Are there any true best systems available? The answer is real no, right? So this slide kind of tells you, right? So what I tried to do was we took up, if you remember I like the 10 cam crossover, which is that 9-day average crossing the 26-day average. What I did was I developed systems on that particular condition of a bullish 10 cam with the Chico being above the price. And I tried. So you develop the system on simple candlestick based, simple Heiken-Ashi based, simple. The Z trend is a proprietary indicator which was developed and available in TradingView. right? So I develop, this is nothing but a modified Heiken-Ashi, right? Heiken-Ashi itself is derived from OHLC, right? So you can develop your own systems also, like a Heiken-Ashi system. You can develop your own system wherein you plot the candlesticks based on some input values of open, high, low, and close. So you have your own candlesticks which you can derive if you can run up programs. And if you see here, it keeps varying. And what you like is, and since this Z trend is up, right, any derivation you do out of that, it can either improve the system or it can destroy the system. Luckily, in our case, it has improved the system. So for the same trade system on the same universe, if you followed OHLC, your success ratio was 54 and your expectancy was 2. And when I moved all the way to this modified Heiken-Ashi, I got success rate. So it all depends on, PNF is a comparable system because it is not based on days. So here is all days. When I say it's 26 days, it's all 26 days here. PNF, I can't compare because 26 column will not be equal to 26 days there. So that's why I've left it out. So it all depends on your inputs. And what I had also done for a particular trading system across styles, right? Now you take a particular trading style, and I like Z-Trend because obviously from here, Z-Trend is what on the trade. It's got the best tax success ratio and everything was the best in this. So if you take this particular Z-Trend and then you try to do a back test on time frame now, same thing you will see. The trades fall and success ratio, obviously it has to fall in that ratio, right? Because your number of trades is less and it better give you better success rates and returns and ratios. What I have observed is that your trading system is very, very important. So in this case, my trading system is bullish 10 can, right? And I tried to do what happens if I try to fine tune this. See, there is a difference between this and the next slide. In this slide, my entry criteria is the same, but your input criteria was different. You used candles, you used Heiken-Ashi, and you used a modified Heiken-Ashi. In this case, my input criteria is the same, but I looked at different time frames. Okay. Now, in this case, basic Z trend. And I try to add conditions. See, for example, if you go to option 2 is nothing but when the price is above 10 can, right? So what I've understood is that you don't find any big change here in any of the parameters, right? So forget about all the options. You look at the numbers here. What are these options? If you remember, my first condition was a bullish 10 can. On that, I said, okay, bullish 10 can when RSI is above 50, or when MACD is like this, or when ADX is like that. Whatever additional condition I had put to my basic condition, it didn't do any tricks, right? So all these are additional selection criteria for my basic condition on bullish 10 can. It did nothing. Nothing improved. So what it tells me is you don't have to have an exhaustive condition for your selection. A simple condition is good enough because our first condition is a very simple condition. Look for bullish 10 can crossover. Don't try to be smart in trying to define if the bullish 10 can happens when RSI is above 50. Your number of trades may change or may not change, but it does not change anything. It does not change your average trade. It does not change your risk reward. It does not change your expectancy. So for a starting person, once you fix which is your best system, which you only have to experience, right? Unless you read physics, chemistry, maths, commerce, and figure out, you may not find out which is your best liking. So you have to listen, figure out, understand, and choose which is your best weapon. Once you have done that, don't worry about tweaking that system. If you believe this MACD crossover is the best for you, you try and tweaking that system. My guess is you will fall like this. You will get a data set which tells you that any additional tweaking is not going to improve much. So for a starter, that's where you will have to dig on. Understand which is your best technical indicator and use that to design a system. That's where you will have to do. Did that answer your question? Hello? So I thought, let me just complete with this Excel sheet, which I keep posting for all of you, right? So that's the last bit of the work that I do when I screen it out. As usual, I always look for the strongest, right? So because it's your own money, why do you want to figure out whether when you know that everything may whip end of the day, right? There is no hard and fast rule because we are still Sunday. Sunday is still away. By the time market opens, there are many things which is outside control. Maybe as on now, we might be jumping that the Dow closed at record high, everything closed at record high. So Nifty has to open at X levels above. SGX Nifty is already at some number. All might change to Sunday morning. And we have no idea what's going to happen on Sunday morning. So those things are outside our control. So what happens when we have a bad start on Monday? I know I have a bunch of stocks which are very strong. So do they give me an entry is what I would look for. It doesn't matter for me what happens on Monday morning. So then for that, I need this Excel sheet, right? So that's where this Excel sheet. So now out of 500, I hardly have about 20 stocks to worry about. So what I do on my 20 stocks is that since it's Excel, and when Vasishta is there, I should not talk on Excel, but what I do is I do a very simple work on my Excel. Right? So I go and sort it out. The way I sort it out is I look for my PF performance scores. See, what is the best? Best is the buy signal in all time frames. And if all the time frames have buy signal, then we know the maximum score is only 2. So the maximum score is 8. Right? So I go and choose for, that's indicated by the PF performance score. So I choose for the largest to smallest. Right? And then similarly, there is another RS performance score. If you remember, we screened our stocks against the index, which is Nifty 500. And what do I want? I want a buy signal for my stock against the index. My stock has to outperform against the index on all time frames. You know, that's the best you can hope for. So again, I look for largest in that segment, which is this particular column Q. So now you have your momentum, and now you want the speed, right? The other quantity, which is defined by the ranking score here, right? Now, if you look at JB Chem Farm, it says it is 2222 on all the time frames. So is Coromandel. How do I differentiate between JB and Coromandel? That is done by the column L. Column L only tells you how strong has been that move. Remember, a value of 2 means it's a buy. A buy could just be a buy, or it could be a buy forever. So that's what is indicated by the strength of that buy in this ranking score. Higher the number, which means it's been in a forever buy in that column. There has been no pullback in that particular time frame. For example, in JB Chem Farm and Coromandel, right? If you look at 1% column, Coromandel has had a pullback and it has started a fresh buy, right? Whereas this bugger has been going on in that column for some time now. And you look at the other numbers, it's 44, 42, which means it's a very strong buy column in higher time frames. That's what this ranking score means. And exactly what the ranking score for the relative strength also means, how strong has been the outperformance. So when I do that, it kind of rearranges the entire sheet for me, right? So now, what does this mean? You already have a strong. So now you have filtered your own list by strongest, stronger, and strong stocks. Unfortunate reason, we opened negative on Monday. I will look for Balakrishna Industry, right? Balakrishna is the strongest stock among the 500 index, and it's also outperforming. That's what this 6 means, right? So if the index recovers, among all these guys, Balakrishna will be the fastest to move. That's what this is telling me. Unfortunately, it's already in a buy signal. But fortunately, my sell signal is only at 11.28, right? Which is about $40 away. So it's a fairly risk which I am offered to take. So in Monday, if the stock opens down, I may be willing to risk this $40 and go and buy that. Because I know that if it closes below 11.28 is when I risk my entry. Or for that matter, JB Chem Farm, right? It's about 20 rupees away. So that's what it tells me, and I don't worry about tracking hell a lot of other stocks. So it allows you to focus. Those who watch the Animal Planets and the National Geography, may there be 1,000 other stuffs around you. Don't worry about it. Just focus your attention on that single play. And for me, it would be these 4 or 5 guys. So I wouldn't even though these are modern, these are available, I wouldn't look at it. Just keep these 4 or 5 in your phrase, good enough for you. One of them clicks, you're going to get a good money out of that. And since you're looking at buy and hold kind of a scenario, I would wait for it. So that's how I do on a regular basis on a daily. So it takes about 20 minutes for me max. So you screen it, come down and close it. And when I am done, what do you want to do? You have your notes ready and you look for it. And in this case, Britannia is the only guy where I know where is the buy trigger coming up. So if Britannia starts to trade above 3520, trade or not, so you can buy that. But if the bugger closes below the buy price, you decide what you want to do, because you know where the stock is going to go, because you know that Britannia's chart, right? So textbook trades. So it's up to individual what they want to do. So let me go back to Britannia and right. So let's assume Britannia opens about 3520. What would you do? Right? Let's say I want to buy, I will buy. But then what happens to Britannia? If Britannia closes, as long as Britannia closes above 3480, I will hold on to that buy. Because I know if it closes above 3480, I will get a column of blue here. This will come back here, right? The moment I get a column here, my sell signal will be generated on a close below this, which is 3445. So if I had bought whatever 4-5, so that's the risk you're running now. So you know your buy price, your sell is at 3,445. Are you comfortable with that loss? If you're comfortable, take that risk and buy on Monday. If you're not comfortable, wait for it because it will give you a trade at some point of time. Britannia has also given other trades. Finally, and then somebody would have wrote this, right? You could have entered here, but then remember the exit price is below this sell. So it's an individual's call where you want to do. And depending on each person's risk profile, you play around with your right? Follow traditional entry, follow traditional exit. Unless you have been traveling on a train for a hell a lot of time, you don't want to jump out of a moving train, right? And if you don't want to get into a moving train, you would not do this if it's your first ever journey into a train or a bus. Follow the same system of discipline here. If you're doing it first time, don't do all this. Don't buy Britannia. Buy Britannia if it gives you a close above this number. Whatever it is. But don't buy trying to play all this. You will do this the moment you get a little experience. That's what experience does to people. You will try reverse sweep and all kind of stuff only when you are a little comfortable and you're confident of your game. So do the same. Whatever you do in your real life, do it in trading systems as well. And for those who do not have trade point software, you can set up this system in trading view, right? I thought let me just all right. So you can set it up in trading view as well, because you don't have to buy that software because for whatever reason it is. Right? I buy that because it gives me a lot of flexibility and it gives me point and figures. If you don't want to follow point and figures, but you are looking at some other system trades, right? So you can set up screeners here. And then when you go and set up stock screeners here, and I like this system very much because I tried it and it gives you a hell of a lot of options to play with. And remember the other screen, the more you do, it's not going to help much. So I have decided that I will remove all of them. And then I will have only, if you look at here, it tells you how many screeners you have. Right, so it still says there are 9 different screeners. So let me go to something else which is much simpler version of that. And for those who see what I do for US, this helps me because it allows me to screen US stocks. I can't screen US stocks in my PNF because there is no provision for it. So what I do is I go back to trading view and I have set up on S&P. This is on S&P 500. So what I have done is, so this is common stock and the index is S&P 500 and this is the signal, right? The signal is just an Ichimoku crossover. It's a bullish 10-can crossover, right? And then I can screen it across time frames. When I screen it on monthly, if there are any stocks, it comes up here. If there are no stocks, nothing comes up. So it allows me to screen for the stocks here, and I can go back and check for those stocks. What I do is then, if I want my point and figures, it's a lengthy way out. You pick up download the stock data, convert that to a file, you can upload it into TradePoint and do all that. So that's for people who have experience, time, and then they can figure out with what they want to do here. This is common stock, and stock, and unfortunately here the nomenclature is different. As and Kijun. In the US or in some of the conversion line is the Tenkan and baseline is the Kijun. So I look for conversion line crossing above the baseline, right? And I think you can look for such filter here in the index. And it allows you to choose which index you want to run as well. So you can choose either NASDAQ or all or S&P. This is in India. I was wondering why it was not giving. So if you look at NASDAQ, and if you look for a bullish 10 can in NASDAQ on a weekly time frame, this many stocks have come, right? So then you can go and look at individual stocks and then whether you like it or whether you don't like it. So what I do is, if you want, I can go back and pull out those stocks and then I have done for a few. It's a lengthy work to do. This is Amazon, right? So I have pulled down the historical data of Amazon in a compatible file, which I can export to this software. I have exported that into this software, and now everything is traditional now for me because I know how this software behaves, right? So then you look for your buy, sell, whatever. Now it knows, so this is my target price when I have to buy. So if now this fits my full follow through signals. So if I get a buy here, this is going to be the likely target. So I can trade on this style. So that's what I do and that's how I generate that Excel file on a daily basis. I thought, let me share that there. I was earlier sharing it with a bunch of people where we have our own trading systems. Each one of us traded our systems, and that I used to post. So I thought, let me share it here. And since there were a number of questions on how that was done, this is how it was done. If somebody needs some help in setting up systems, I think we can do it on a one-to-one basis on a separate time frame. I can always take, if you have TradePoint software and if you need help in setting up your system, I can always be your help. Maybe we can set up a different time frame and we can sit down and I can take through this similar style, help you to set up a system here. It's not very complicated. You write down what you want in a piece of paper and then we can use this software to set it up and I can help you with that as well. So with that, let me wind up and see if there are any questions that are there.
Sir, one question.
Yeah.
So basically there are time frames daily, weekly, monthly.
Yeah.
What is its, let's say we want less trades, obviously it will be monthly, but still then if we go for monthly, then there is a risk reward increases and that expectancy increases. How is that?
Yes. Yes. See, it depends on the trading system also, right? What I have seen is for a particular trading system across time frame, it increases, right? So if I just take a bullish 10 can as a trading system, and if I look at daily, weekly, monthly, then there is an increase in risk reward. The number of trades fall, increases in the risk reward, and then the success ratio increases. So, and I have done this for a number of systems. Let me just share one Excel. This is my favorite pastime. try to create as many systems as possible and see how they behave. Does it work? Does not work? I have all the time, no, so I can do all this. But I have seen that whatever you want to try and do doesn't work. You finally there is no magic wand at all. And any number of screeners, I have done simple EMA crossovers, whether a 3 EMA crossover, 5 EMA is better, 50 EMA crossover, 100 EMA, the golden crossover. You can try all combinations. End of the day, it all matters down to how many trades you want to do. Remember, the number of trades is a direct relationship with the capital you have, okay? And your universe is Nifty 500. So please remember, on one good day, you can have 500 trades, which is hypothetically possible. Maybe reality is not possible. But remember that risk always runs. So there could be a day when you have 50 trades coming up. And the backtest is not going to give you that consideration. The backtest believes you take every single trade and you exit every single trade. It's a machine. There is no emotional here. So if we want to, if you look at the backtest results and say you get a 80% success ratio and a 25% returns expectancy, and we jump on it and we use discretionary methods somewhere, then we have violated the system. So that's the catch. And so I always like to have very less number of trades, because present it's not possible to keep track of all the stuff. So the best one for me is weekly. So on a Friday evening, best is to look at for these things, and then you can set up your order systems as well. Because if now you know Britannia, you know where it has to buy into the order and leave it there. So Monday morning, since the majority of us have all access, so it will pop up on you and say, okay, these orders were executed, these orders are not executed. So you have minimal work in your regular job that you do. Otherwise, it's a headache, nuisance for you. So that's my style. I can't say that's the best for everybody. So you have to figure out what accordingly on that. And I did backtest for all of them. And there's a hell a lot of systems that was created. I did on a lot of them, right? So I will just so this is one such file, right? So all this is nothing but these are all the strategies, right? And this is all the universe. So this is my favorite pastime. Okay. So I keep doing all this. You create your system, then you look at period, and then you look at the universe, and then you try to do what and see where are these numbers, and then you find out what is. At least off late, I have stopped. I don't do too much of this work. I also got bored, you know. It comes up. What happens is when this result comes up is when you go to some place or you listen to something new. Then I try to see, can I improve my hit rate? And then after a few tries on the system, then you find it doesn't work, and then you go back to your old style. Because it's a vast universe, right? And I believe it's still an 80-20. 80% is science. These are the science which we talked about. 20% is still art. And there is no way you can master that art. That's experience. Experience cannot be taught. So with that 80% of science, how best can you fine tune and have a implementable, rational approach for stock picking is what I try to do. And that quest, I still continue. And whenever I listen to some that's where, the other day also, funny thing is when somebody said something for me, I always try to look at the chart first, and that's where my interest runs still. And hopefully, sometime soon, I will be able to spend more time only on stocks. Pretty much tired of working, and then hopefully I will get in live trades. Until that time, I do not wish to subscribe for real-time data feed. So that's where I am. So for people who wanted to set up systems, I can always offer help, and we can connect and continue this discussion on another day. So is there anything more specific which people would like to? I don't think there are any questions in this chat box here. Was there a chat box here? I don't see. I don't see a chat box. So is there any question, guys? Oh, there is a chat box here. Oh.
Thanks, Madhavan sir, for your all insight into this. Yeah, it will take some time for us to digest first. Yeah, but it's it shows up how much you have done, basically, how much deep work you have done. Thanks. It was really wonderful. Yeah.
It's just passion, right? See, somehow somebody was asking, my brother was asking me, what would you have done? I said, say, in general, just as for 2 years I was in US, right, as a pastor, my postdoc, and I went on an exchange scholar visa, and I didn't get my family along. So after 6 months, when I wanted to get my family, this I am talking of 96 to 98, and they couldn't come because they had a lot of issues in getting visa stamped. And then I got stuck alone. What to do? So that's when I tried to Google around and understand how to create a web page. So I went, those days there were some fancy places where you can create. There was, I don't know whether it still exists. There was a page called tripod.com, and you can go and create a web page for yourself, personal web page. So I learned how to create web page, how to create hyperlinks. So that's the passion I created. And honestly, stock market is something which my family was into for a very, very long time. In 84, 86, 88, I used to just sign off. My father used to buy stocks. I just sign off a piece of paper. I don't even know what they were buying. Then I was not interested in stock market. Somewhere that passion picked up, talking to people, and then there is nothing else which was interesting at that point of time. And from then on, this has been my passion now. Maybe at different times, different things crop up, and I keep telling even to my own people in my office, and I'm a fan of that S curve. So maybe this is what is helping me to move from where I am today to the next level, which is helps me to keep growing. You learn and don't stagnate. That's what has kept me motivated. And I've stopped doing too many tinkering. To me, it is only Ichimoku today, and I still try to learn. What we have seen is only very small. There are very high-end stuffs inside it, which I'm trying to understand and learn, and hopefully we'll be able to share sometime when I've understood that.
Thanks, Madhavan. It was a very nice session, especially for sharing your own system. That is the biggest part of it. One can say that where one finds comfort, but there one needs a helping hand in what is the direction to one proceed. So that is where it is very critical. Thanks for sharing your system and explaining it in detail over here. Thanks very much.
Yeah, on the books, see, there are a number of books And it all depends, So if you are an RSI fan, there may be a different book. But since I am a point and figure fan, Prashant's book is what I would recommend if you would like to read on Prashant's on the point and figures. It's available as in Kindle version as well. But it all depends whether you want to take point and figures as a technique. So first I would choose, what I would recommend is learn which is your choice, right? It's like buying a chemistry textbook without trying to do chemistry major. So first figure out which line you want to be.
That's the part. Now, see, typically what happens is everybody talks about a particular system or the technique, I should say, not a system, technique. But how does one utilize a technique, which is a system that whatever one filters down or whichever way it is, that is, I would say, a lot of hard work, a lot of perseverance, which you have shared over here.
You're right in a sense. Right? See, it's not that way, because what happens is that everybody, you come through different stuffs, right? See, my earliest inception into this was a simple 3 EMA crossover 5 EMA. Okay, all you have to do is to buy when 3 EMA crosses 5 EMA, sell when the reverse happens. So that's the first trading system which I worked on, which is fairly decent, good. But then you'll have Ajar signals because it's a 3-day moving average. So 3-day moving average can have a buy and a signal. You can have a buy on Monday, a sell on Wednesday, and a buy on Thursday and a sell on Friday. Correct. It's just crazy. You can do that if you're going to follow just one script, right? For example, if you say I am only going to trade bank, then it makes life easy. But when your prey is wide, then you need a system which is wide. That's where the problem comes. And for a starter, you have to, today you listen to point and figures. When somebody might be talking on MACD, listen to that. Somebody might be talking on RSI, read. Or when you read, something attracts you, right? That's the only advantage of going to some of these conferences, if you personally ask me. Because in a single place, you are exposed to a number of techniques. Right?
That I understood. That's what I said. Typically, people talk about techniques. How to convert the technique into a system, that is where a lot of perseverance, a lot of effort is needed. And that is where you came in and explained your system in detail and patiently. That's what I appreciate.
What, for me also, I have a system of 3/5 also, but I don't track. I listen to Ichimoku. I think that was in 2014 maybe. I fell in love with that system. If you ask me what, it was so simple for me, right? The chart and the clouds, and it's just simple, above, below. Forget the rest of them. So when you look at the chart itself, it kind of tells you what the chart is doing. Is the price moving up or price moving down? That's your fundamental understanding what you want to know, right? And then also it tells you move between daily, weekly, and monthly. And if a stock is doing that in all the 3 time frames, then you know the stock is strong hands. And since the levels are all then derived from price, it attracted me. And then I started to learn a little bit on that. I've learned about RSI. So that's where whenever people, in fact, in my other groups, we were having in my weekly scanner, there is another scanner which I run based on Ichimoku. It came up about 28 stocks have come for a buy. Okay, 28 stocks on FNO universe, only FNO, not even Nifty 500. And then so that my friend told me, the market is already in overbought condition. Is overbought. So that is where I respect RSI, but I don't follow RSI because RSI can be overbought. It can be overbought for a long period of time. It can be oversold for a long period of time.
Right.
So that's where it didn't impress me upon that. So maybe for some people, they may understand it better and they might like it. And they may develop a successful trading system. I know people who have developed successful trading system only based on RSI also. So it all depends on, that's where unless since I don't have a good opinion or I am not a favorite of RSI, I will never be able to convince you how RSI is a very good trading system. Right? So that's where the problem comes for somebody to get exposed to various trading systems for you to pick which is the best.
Mhm.
There are some guys who are experts in harmonics. So if you listen to him, they will. I today cannot even spot a simple ABCD, but you will find people talking on crabs and butterflies and dragons and things like that on harmonic patterns. He will vouch for you. Harmonic is the best technical system for you, right? So that's what happens. For somebody to get an exposure on the various system, you have to listen to that person who vows by that system. Then he will be able to impress you to say how that system is useful. Then you make your call. And since when we listen to people, they've already looked at various systems and they have developed a particular system, and they will never be able to impress you on the merits of it. I will never be able to impress you on the merit of an EDX. So then it becomes difficult for me to convince you how you can develop a system based out of ADX.
Right. That of course.
Okay. And I think if there are any questions, we can always continue on CM. I will continue to post those Excel files, but if you have specific questions on those, I started posting it as a link, and I hope that link is accessible. I haven't heard anything, so
Yeah. I think. See, this is actually, it takes time to digest the whole part of it. Just
yeah.
listen to it, and maybe over a period of time, only the questions will start coming back.
Sure.
Yeah.
I have to get hands dirty first.
Yes. It takes some time.
Yeah.
But until you get dirty, don't bleed. That's the only right. It's a very, because what happens is that once you lose money, then you get to get honestly, having talked this long and showing so many systems, if I show you my FNO PNL, it's still negative, right? If I show you my cash PNL, it is hugely positive. So I cannot understand why I'm a successful cash trader but a pathetic FNO trader, right? Because what happens is in FNO, the MTM goes up in such
MTM.
high
Right.
number. In maybe my psyche does not allow me that.
Correct. It's a different world. It's a different world.
Exactly. Till today I'm unable to understand. In fact, consecutively every year, when I file my returns, my FNO will carry a negative trade, and I still do it because for the heck of it, because I don't pump my money into it. Whatever small amount of money I have, I play with that and I close it out. And I've never been able to phantom FNO, and so I don't want to go there. I leave it off. So that's where it becomes an individual.
Right. That's of course there. That's what I'm saying. See, it's question of getting hands dirty, making sense out of it, and then only I think some questions will come forward. कि क्या कर सकते, क्या नहीं कर सकते.
No problem. Keep your questions coming in the Capital Mind channel. So wherever possible, I will get back with whatever I know on that.
Sure. Thanks. It was very nice session. Thanks.
Yeah. So thank you guys. If there is nothing, then I think we can wind up.
Yeah. Thanks, Madhavan sir.
Thank you.